All right, all right, all right. Cool. Welcome, everybody. Welcome, welcome. Y'all like this cool little tool I made? This is cool, right? I made this in like 5 minutes last night. It's like a randomizer based on like my website. But yeah, anyways, like I said, when it comes to the giveaway, I'm just gonna do 1, 2, 3. I'm gonna just go through it and then add the list of those who in case those people can't get their prize or they don't answer or whatever, like I'll just have like the list of who would be next. So and I'm gonna have it here in my notes. So um yeah, cool. Good luck to everybody. Let's see. Should we do the monitor or should we do the Instagram first? Should do Instagram first, right? Sure, whatever. All right, please, tool, do not mess up. Please, please, please. I don't have time for this. 1, 2. Actually, no, this is gonna be 12, right? 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Nice. Nice, nice, nice. Very anticlimactic, right? I guess. Congrats to these people. Fuck. Congrats, congrats, congrats. Nah, nah, nah. Nathan, you did not deserve to win this, bro. I'm sorry. Okay, backup winners. That's crazy. That's funny. That's funny, bro. That's karma right there, guys. He tried to get in last minute. He got in last minute and he missed out by one. That's funny. Screenshot this. Congrats, congrats, congrats. Okay, I don't know why these aren't showing. Anyways. Are you sure? I mean, bro, I mean, don't worry about it. Like, if what do you mean you didn't make it? No way. Hold on. All right, if you followed the if you followed the criteria and you didn't um and you don't see your name here, just DM me and then show me the proof and then we can talk. Because this should have copied everybody that I had on the post, but either way, I don't care. Like I'll give an extra free book. I don't mind. Anyways, cool. Now the good stuff. The good stuff. So like for here, if you cannot get the monitor or like something happens, like or like they go too late, um, I'm still going to give you the book in case. Bro, you can pay with crypto. That's fine. That's fine. Don't worry about it. Just save it, and just we'll talk later, or just DM me on Instagram or Discord or whatever, and we'll figure it out. But cool. Now it's the good part. Good part. Good part. Good part. One. Oh, nice, nice, nice. All right, whoever these people are, very nice, very nice. Take a screenshot. Nice. Congrats to the winners. I don't know if we have anybody on call. Do you have anybody on call who won the monitor? No way. There's no way we don't have anybody who didn't win a monitor on call. That's crazy. All right. Either way, these are saved on the recording. Because I am recording, right? Yeah, I am. Cool. Um, but yeah, cool. Just y'all DM me after this, and we'll figure that out. Anyways, welcome, welcome. Couple things I wanted to go over today. The number one, um, did you guys go and see that recording that I posted? This one, in the free chat. I mean, the free chat. Yeah, I posted it. It's an unlisted video that I posted. I don't know if you guys saw it. This one right here. Did anybody see this here? Did anybody watch the video? Did anybody fill out the form? What did you guys think? So I can get to like a little bit more of a, so I can get a little bit more of context on this for you guys. Oh, and also for the people that didn't win, I still have the free LGC blueprint, which is like, I think it's a really good structured book. It's my newest one. And I think every time I do a new book or a new form or something, it gets better. Um, but the LGC blueprint is here if you guys want to see like how to get that. But anyways, that's besides that point. The Did anybody watch this video? Did anybody go uh this conversation of like the what I wanted to do with like a roadmap and like stuff like that? Did anybody look through? Or did you watch the video? Like see what we were talking about? Yes, no. Did anybody watch it? No. You haven't gotten into the video? Yeah, so the video, I would watch it like at 2x speed. Um I have your information. Like I have your email and stuff. Um so I'll just like go through the that and like go through the names and I'll email you or I'll text you or something. I don't know, like or like and I'll make an announcement like or I'll send a message in the Discord like so yeah, but um when it comes to this, like I wanted to make a roadmap because I feel like something I'm lacking, especially with the group, is uh having like a set roadmap. Like I obviously like in the start here section, there's like a like there's this, right? But this isn't enough, right? And like and it opened up like a bigger conversation with trying to see with the questionnaire is trying to see where people are, trying to understand if there's like a bit of nuance when it comes to people with a certain level of experience with what they're stuck at, etc. And then I try to dig a little further because this is what I want to talk about. I'm gonna make like an article on X. You know how like they're having that whole article thing with X. It's like the bet like the most popular one gets like $1 million or something. I think Dan Coe is the one that's winning that. But what's really cool about that is um let me see. Yeah, so I have people's info. So like X. What's really cool about what I'm trying to get at is when it comes to like rule sets, like for example, everybody talks about data, everybody talks about being having a mechanical system, and I'm even like at fault with this. Um, and in terms of like having a mechanical system, like what do you guys think that means? What does the mechanical system mean? What is the difference first between a discretionary system and a mechanical system? We'll start there. What is the difference? Do you guys know what I mean by those two terms? Do you guys not know the answer to that? Cool, cool. I mean, it's okay if you don't know the answer. I mean, you guys can even unmute for that. I don't really mind. Because it's it's something that just bothers me. Like it doesn't bother me that like I don't like I'm not mad at somebody for them saying that, but it bothers me that it's not clear enough. Like what for one, what the difference is, but then two, what it defines a mechanical strategy. So nobody here knows what the difference between a mechanical and a discretionary system is. Really, really, are you guys new? Do we have new people in here? Are you guys like not new to trading and stuff like that? But pretty much this is like his article, and it's like they just made these articles, and I want to start doing these kind of like as like a type of blog. But so really nobody can tell me the difference here. That's interesting actually. Nobody can tell me the difference between a mechanical and discretionary strategy. What is it like? What does that individually mean? What do they individually mean? If I get a bunch of no's, then I'll just see it as no. Mm, yeah. Okay. Okay. So right, these are like the Google definitions or whatever. Just so you guys can see. Fixed rule-based system, right? Discretionary relies on judgment, intuition, experience. Like a mechanical strategy is like you have a rule set, you follow this rule set, um and then you get a set result. And then whereas like a discretionary strategy is like based on judgment, intuition, conviction, right? And in my opinion, like this is just like a one of my personal opinions, like majority of the people that are saying they have a mechanical based system is not necessarily lying to you. I think they're lying to themselves. And I think it's like a belief aspect that they just have not broken yet. Because this topic has been bothering me, and I've been talking to a lot of my friends who trade. And I was like, hey, if you could tell me your edge in like a simple way, what would you say? And then okay, they start going through their rundown, whatever. So okay, so it's for one, that's not a simple way. Two, you're explaining how you go about looking at the charts. Okay, let's look at how you go about the charts, right? Let's say let's say somebody trades a market structure, right? Let's say somebody trades market structure. Like let's say they trade um a high to low, and then they wait for a retracement to do this, to do that. And I'm like, okay, how do you define a range? Okay. Two, how do you find that range? How do you know the bias, etc.? And long story short, the deeper that we go, it becomes a lot harder to answer. And like the easiest example that I could show you guys is like when I was making the sweep model rules, right? Let's say this is a sweep model. Um, I'm like, okay, you trade liquidity sweeps. What do you define as a liquidity sweep? It's like, okay, when you take out a substantial point on H1, H4, like sweep it, and then so and so confirmations happen. I'm like, okay, how do you define that? How do you define a substantial point of a structural point, a substantial structural point? And they'll be like, oh, it's like a H1 high, H4 high. I'm like, okay, that's like I see what you're saying, but you're not seeing what I'm saying. How do you define that? How do you know that that pivot or that structural point is the correct one to go based on your rule set? And that's where it gets really complex because yes, I could tell you that solidified points, like let's say a solidified point, where are my annotations? A solidified point, right? Obviously, this high is solidified by this break of structure low. And you can argue here too, right? And this, they're just, the distinction is like the level of structure that we're referring to, but there is no set structural level per break. So like realistically, if I had a fully mechanical system, I should be able to tell you what exact level of structure, um structural point this is. Like this is a solidified high based on minor intraday. I should be able to say that, but then it gets a little complicated because we see two different lows, right? Therefore, this is the internal, this is the current. So now what type of rule set would we need to implement to make this a consistent rule? And like the only way to do that is like either it takes out a previous pivot, it has a certain amount of candles, there's like a distance thing, but like these are things that people don't think about. And then okay, so that's just for that alone is just for like a structural point. Like I hope I'm not losing you guys here. Let's say somebody says they trade sweeps. I'm like, okay, what do you define as a sweep? Like you take out the structural point. Okay, we just went through that. I'm like, okay, how far can the sweep go in order for you to consider it valid? And that trumps everyone that I know that trade sweeps every time. Not because they don't have an answer, but because they have an answer, they just are unable to articulate it. So I'm like, okay, if you guys have the sweep book, you guys know that typically like my extreme premium range, extreme discount range is like no, it can't reach further than like the 30% of the extension. Therefore, this is 100. So can I go beyond 30? Okay, so that is one rule set. So therefore, my sweep, I'm creating an unsubstantial new high. That unsubstantial new high is defined by a internal break of structure that fails to break beyond 30% of the extension of the range. That is my predetermined rule for a sweep. That would consider the sweep. But I don't really put that on every chart because I assume that over time. And if you start to assume things over time, then that's where the discretion side of things start to like chip in. So what I'm getting at is people have rule sets, but they can't quantify the rules that they're doing. But realistically, you should be able to quantify your rules, maybe not your entire model, but you should be able to quantify your rules relatively easily because at the end of the day, when we're looking at a chart, there's only three constants right now based on this chart: time, price, and the view, which is candlesticks. Right? That's the only constant. If I was to just switch to charts, that's the only constant that are present on the chart. So I should be able to, based on having candle views, knowing that price can go up or down, and that time can only go forward, that I should be able to build quantifiable definitions, actionable strategy. That's what I would mean by an actionable strategy based on the rule set that I currently have. And that is a big problem to me because if you do not have that, or if you cannot even figure out how to, then you by default cannot consider your strategy to be mechanical. It would be discretionary. And like, okay, what's the point? Duh, sure. The issue now is data because people love to say you should track your like user trading journal, get your data, based on your data, do this, do that. But that's so rudimentary. That's so like that's so simple. That's too simple because if you do not have the rule set placed, like that's a quantifiable way to read your strategy or even your concepts and then your strategy, then the results are not as valid because let's say I trade 50 sweeps and I have a 50% win rate. Okay, if I don't have the actionable rules, the quantifiable rules in play, then by default, this number is not correct. Why? Because you leave discretion and conviction and market IQ and stuff like that, like just kind of the internal thoughts help your decision making, then therefore your current state of mind is now another variable to add to your statistics. Because maybe I might have 50% win rate based on sweeps that are based on like a semi-discretionary system. Therefore, I now have two options. It's like what is my win rate now when I am locked in, ready, like nothing is bothering me, nothing is distracting me. And then what is now my win rate when I'm stressed out, when I have a bit of confusion with what's going on, stuff like that. Like, do you guys get what I'm saying here? So now if you don't note that, understand that, then this number becomes like not as relevant. all you're then doing is just refining your rule sets. But you could just do that by backtesting. You guys get what I'm saying? Because if somebody says they have a 50% win rate and they don't track their state of mind and they don't have quantifiable rules, then that number by default cannot be true. Does that make sense, guys? Does that make sense? Yes or no? So my point is I don't want to say that people that say they have data, like I'm not trying to diss them. I really don't give a shit to diss them. I don't care. The issue now is like in order to truly progress, you must be able to measure. But if you want to measure, then you have to have a structure in place that's measurable, right? Like duh, like right. If you want to measure something, it should be measurable. But what you may consider to be measurable may not be measurable if you actually break it down. That's why you see like all these that's why you see hedge funds invest billions and billions and billions and billions onto different hedge and to different like avenues when it comes to like quantitative finance and like building these strategies. Because if we are to now, let's say, try to code a sweep model under the constraints of you, let's say we have a predefined range that's already been defined, let's say, and then we have an internal sweep, and then it has to have a threshold, which is how high it can go, and then it needs a confirmation inside. But that's not the point. All I care about is the sweep itself. So if I wanted to constrain that to rules based on candles, based on the time, based on the price movement of up or down, then that becomes a bit complex because now let's say I have a 30% threshold and I wanted to test that, then the rules or the output may not be as good as it would be as if I was to do it manually. That means that you're leaving a lot of room for assumption. That's why stuff like momentum is such a big thing for me, because momentum itself can sway an entire model for it to be invalid. But that doesn't mean that the model is invalid. But then how do you judge whether or not to apply this to the model? That's where it gets confusing. That's where it gets really complex, because think about it like this too. If I was to constrain candlesticks, price, and time can go in one direction, price can go up and down, and then obviously there's views of candles. And then I was to try to and then I would obviously need a mechanism to read the chart. Let's just say it would be solidified points. So that means I would have a bunch of different levels of structure, right? I have a bunch of different levels of structure. So let's say if I was to go from like the 30-second to like or like, yeah, let's just say to the monthly. Let's just say there's like 10 levels of structure on just one pair right now. Do you guys know how many combinations I can get of momentum, of multi-level time frame? Do you know and like what would define the sweep? Do you know how many combinations I could get of just the x-axis, the y-axis, 10 levels of structure, and candlesticks? I'll show you guys a number. I'll show you guys a number, like just so you guys see. Give me a rough estimate. Tell me how many possible combinations we can have of relationships between the amount of levels, price, and time. Do you even know how to like solve that? For one, shit. Actually, I don't want to show that project. Quickly. Is there any guesses? No guesses. Bro, what? Combinations? Three? No, 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 no. I think you're misunderstanding here. I think you're misunderstanding here. The there's 3 elements, but there's 2 variations to the y-axis, and then there's 10 variations to the pivots. We're not talking multiplication. We're talking exponents. It's probably like 2. Oof, actually, I can't even think of that math in my head. It's a multi exponent. Um, all right, give me the number. Nobody can guess. Just give me the highest number you could think it could be. Because I'm also like kind of chopping that up. Like I'm actually not fully explaining it how I want to. 10,000. Okay. Okay. I wouldn't say it's a bad guess. Because between the 10 pivot structures alone, there's so many. Like there's probably like 10,000 combinations of just the pivots alone. Then you have to combine momentum and stuff like that. But it's way more than 10,000 actually. Really? Nobody else can give me another guess? Anybody? Another guess? How many possible combinations do you think you can get between momentum and multi-level structure? That's kind of like the simple way to put it. Assuming there's like 10 levels of structure. Even less. We could even say just these 6 or 7. Because this is like compressed. Whenever I was going through pivots, I got like 8 to 10 levels on a majority of the pairs that I was looking at. And that was without me going like below M1. 3.6 trillion. Oh, wait, hold on. Maybe it's not that high. Um, because I think just for one singular level, yeah, it's about mm, yeah, there's about 2 mil combinations ish. And then obviously after you filter it out, maybe it's a little bit less, but like the point isn't that there's like an X amount of possible combinations, like because it's giving me like 2 mil, 2 million different combinations. So now think about that. If I wanted to restrain a concept to a data set of 2 million possibilities, that is hard. And then let's say that I wanted to add another concept, which is like, um, maybe give me, maybe there's another concept that somebody uses. Get somebody throw me something, because this is just structure. I'm just considering structure right now. Okay, break and retest. That alone, we would have to quantify and then have that. So then the thing is now, what I'm really trying to get at is there's too many combinations to quantify. Well, not even too many, but there's a lot. But people don't consider that there's a lot. And that's what means now that if you are not considering these possibilities, then you're also not considering the reasons why it may lose, and you're not noting that in your rule sets. So, like, let's say one of my losers is also like high momentum. Like, if I have high momentum going in the opposite direction, then my trade might lose. So you have to quantify that too, and then add that to the data. And if you don't have that to begin with, then the data may not even be relevant. It may not even help you, because you're kind of getting stuck in a loop, but in a loop of unsuccess, because you're restraining yourself. And if you're going to restrain yourself, at least make it mathematical and like an actual math. Like, so the point is, mechanical strategies do not exist unless you quantify every single aspect of every single situation that you backtested. Backtesting is to know your rules, but if you now also include the factor of adding every other thing, then your entire just profitability percentage is gonna greatly change. Is it gonna be better or worse? Who knows, right? But that's why now, if you know this stuff, you can define an A plus setup, and if you can define an A plus setup, then now if you wanted to backtest that A plus setup, you're gonna see how rare it is because of how specific it is. That's why we said if you add more rules, then there's more complexity. More complexity means that the amount of the frequency of the trade is going to go lower. Like, am I making sense here, guys? All I'm trying to get at is people don't really know a lot of things, and they don't know a lot of things because they're assumed. And if they are assumed, then you cannot be mechanical. So that's a problem that I want to solve this year. I'm going to dedicate a big chunk of my time this year to figuring out how to quantify a a concept based on the restraints of time, price, and view. Because obviously, like, results will vary if you go to like a fucking Renko chart or something, you know what I mean? Or like a line chart, right? It'll vary. You see what I'm saying? Like, things look different. So if I figure this out, then now we can start to really have actual actionable rule sets. And now we can start really testing, because like I've told you guys this before, like, you may be the best CHF JPY trader and you don't even know it. And you can't even figure it out. You can't even find out. That pisses me off. The fact that I cannot know that. And that's why I'm getting deep into this coding stuff, because like I want to learn along the help of like my friends that are devs, to find how to build something that can, I'm trying to solve the problem of iteration, right? Can you iterate a strategy in a quantifiable way so that you can actually test it? And it's a big problem because it's very broad. Does that make sense, guys? And if I can do that, then let me ask you guys something now too. Do you guys, like, who here is against using like a bunch of indicators? Like moving averages, like MACDs, RSIs, like volume profiles? Like, who here is like just feels like they're against it, or against like support and resistance, against like, why? It's a tough question. Why? Okay, never worked for you. That's fair. If it never worked for you, that's fair. But I promise you that if you were to now fall back and try to make actionable rule sets, then maybe the results will be different. In your opinion, indicators fit a narrative. Bro, rules fit a narrative. Because you need multiple confluences. Like what I'm getting at is like a lot of these reasons are beliefs. They're beliefs that have yet to be unproven. Because if they are unproven, then they can be broken. And I just want to then, if I could do that, if I can quantify that, so I can show people not only how to make an actionable rule set, but if you can make an actionable rule set or a way to find that, then you can now start actually testing. And like, bro, who's to know? Who like, who's to say that if you were to add a specific rule set of a moving average uh overlap, like a cross, that it would increase your profitability by like 5%. And who's to say that 5% isn't what makes you profitable? Right? I'm talking to possibilities. Yeah, right. But like we cannot know that for sure unless you test it. But you cannot test it if you cannot quantify it. You feel me? So really what I want to do is then expose people to enable the trader to open up their perspective on like my rules are not as effective as I think they are. And now that I know that, how do I alter it? How do I fix it? Because all I want to do, enable the trader to just pursue the curiosity. That's like the gist. Right? Went on a rant there, but I hope I'm making sense here. Because now if you go put your rules on a chart or something, you like start to see other things. Like, for example, maybe a sweep is invalidated if there's a structural disruption. Maybe a sweep is invalidated for you, right? If we sweep the previous low, or if we already broke structure, stuff like that. You want to start asking these questions, playing devil's advocate with your own stuff, because that is how you will improve, or at least become aware of more things. And if you become more aware of those things, then you can build more conviction. And ultimately, you want conviction. And that's when you start getting, because you get really curious about it now. If you really think about it, if you start to notice that your strategies aren't as concrete and as mechanical as you say they are, you get curious about it, because like that's the process of a belief being broken. And now if you really care, if you really want to trade, then you're gonna go try to solve it, try to do something, improve, figure something out, you know. And we're gonna, especially with AI coming into play, this is the perfect time to start feeding your curiosity, because everything is gonna shift. But that's my rant for today. Does that make sense, guys? Kind of went hopefully I didn't go too tangent there, but kind of the gist. And so I want to solve that by, I'll talk about it more like in that article, but pretty much by figuring out restraints on a chart that can allow me to read a concept so that I can give it a rule set that is actionable. Easier said than done. Completely easier said than done. All right, but am I making sense here, guys? Like, are you guys starting to at least understand what I'm trying to say? So that maybe you start to rethink a couple of things. Maybe a rule set that you have is not as concrete as you're saying, so now you got to go figure it out. And then I want to see if I can build a how to figure it out. Because then if that becomes like a unified process, like I've noticed this too, especially since I started thinking this way. Buddy Lex Waves, right? Who did the giveaway with me? He trades relatively similar to what I do through a different lens, but with a whole lot more discretion than I do. And therefore, we're both quote unquote good traders, but they're yin and yang approaches. And once we find the common ground, then you reiterate the concept to one another. We do, and it actually increases my conviction. It increases my ability to my ability to iterate pretty much. And if we can do that universally, like let's say across 50, 40 people, and we now have quantifiable stuff, then there's a way to collaborate to build a working system using holes from one person um as cheats for another. Like maybe somebody's loophole is another person's cheat code, but the difference is like the nuance. like how they use it, and then there's ways to like mix that. But this is like a super long-term thing, right? But you guys see what I'm saying? If there's actionable rules, then now people can actually learn from each other. People can actually benefit from other people's charts, because a lot of people, like, I even heard this in the premium group where someone was like people only post their winners, this and that. I'm like, bro, you're looking at it the wrong way. Like, someone posting a winner is my reason to go see why that won. And if I can go see why that won and I can benefit from it, then it's something to know. It's just something to add to the arsenal, something to add to the notes, right? Like, this whole game is just about continuing to iterate, continuing to compete, continuing to learn, continuing to expand, right? And that doesn't mean add more concepts. That just means refine, understand more, right? But that concludes that. Just stuff to think about. But yeah. Anyways, when it came to charts, I did not take any trades this week, guys. I did not check. I I had a couple setups like going, but I just was ultimately never able to catch them. Like this week, who's been following like my biases and stuff like that? Like with dollar, isn't this crazy? Oh shit. Um, damn, I deleted my notes. What? Oh no, isn't this crazy? We called this like weeks ago. Do you guys remember this? Like seeing this play out, right? Firsthand. Really fucking cool, right? I didn't think it would be this fast, but caught me by surprise. I missed out on a great fucking week. But the problem was there wasn't many reentries. Really interesting, right? Like earlier this week, actually I think my charts are like kind of, they aren't aligned from a date POV. But I was looking at some setups. Like this was yesterday or 2 days ago. Yeah, Wednesday on UJ. Um, I don't think I took trades on UJ. No, I didn't take any trades like that this week. Um, like here, the 21st, that was like here. Yeah, right. So I was looking for potential sweep to then aim for previous high. Why am I aiming for previous high? Because if you looked at the review from UJ, you guys know that I was looking at this daily inefficiency, and then we traded the sell to the downside. And because we had internal unwillingness based on this structure break, which is this structure break, and then failing to break lower here, this is now technically like structural disruption. So just based on that, I was looking for hopefully seeing this go higher. I mean, I'm sorry, I'm looking at this wrong here. Here I was looking at this to go higher, but we actually bounced from like a POI here, and then there was a massive drop here, and then today just continued. But um, this one's a bit weird, right? Fuck me, that's a big candle. That's crazy, actually. Um, but yeah, we swept daily highs. Now this is pretty much shifted down. Another one was like GU. This one I'm so like irritated about because it was a great. How you made bearish? I'll do it in a bit. I'll do it in a bit. This one I was really looking for, hopefully like a double sweep here, a dual sweep, and then go higher. Because we were aiming for equal highs and then potentially the next high here. And GU, oh my gosh. Oh my gosh, bro. Crazy. We did not get the dual sweep. That irritated me, bro. That we did not get the dual sweep. That was so unfortunate because then I could have really pushed to be bullish on this. But as you can see here, sometimes you just can't get the trade. All right. So if you guys don't see what I'm seeing here, we swept the previous low here based on the day of the week open, which is crazy for when literally right when market opened, this kind of just started shooting after that big gap. Um, but gaps are not really relevant to me. I care more about the placement, which would be obviously taking this out. And why is that relevant? Because we had the transition here, right? Remember we were looking for bearishness here based on, I made that case study 39 free. If you go to my channel, case study 39, we talked about the CPI sweep here, and then why that converted us to be bearish. And that ended up meeting its target, which is the previous low here. This would have been TP1, TP2. And then obviously that's now invalidated once you start to break highs. And then so then we were here, which is this, and we were looking for the bullish bias to the upside because overall, still bullish. Although we swept the daily highs, like we said. These daily highs, if you guys recall, we got the pullback, and all this is pretty much iterating is what I've told you guys before with whenever we take out like a swing high, which is like this, or an external high, then I'm not looking for the internal continuation. I'd rather look for the sweep and then look for a transition higher. That's what caused this bias. Right? I just didn't think it would go this deep. I was probably assuming here to start giving me something, but then we had the CPI, which caused me to then be bearish. So like you have to be dynamic in terms of like, yes, this is technically a bullish sign, but that was then invalidated by this. Right? This now is an internal reaction that shows me that this reaction from the external is on pause or probably going to be invalidated. Right? So like see trading is like a trickle effect. You have to see it as a trickle effect because it's fractal. If a market is fractal, then things trickle down. That means that eventually like everything will fall down to like a scalp break of structure could then invalidate a minor intraday bias, which would then cause a minor intraday transition, which would then lead to the major failing, and then this, and then this, and then this, and then this, right? So you got to think of is that if this, then that, if this plus that, if and then plus this will equal that. And the reason why I bring that up is because of what I'm going to talk about with UCAD. UCAD was a great example of seeing the trickle effect. But this time it was from top down because you can do down up, like down top analysis. I don't know, but top down, I was looking at UCAD a lot because Lex told me to look at this because this was great. I just wasn't able to get an entry. Although there were some great setups. I even had this last night. I'll come back to that, but I had like this, but it was in my sleep. So the reason why I say trickle effect now, let's do top down. All right. Like top down analysis is irrelevant, sure. But the issue with multi-time frame analysis is timing. A monthly trend sweep is not currently relevant to like let's say the minor intraday or the scalp unless X and X and Y and Z is happening in the time frames in between. Does that make sense? Like this is relevant information. It's just not relevant to the type of trade that I'm looking for unless we then start to know internal stuff and align it, right? So the monthly, technically a bearish trend. I didn't look back, so but this doesn't really matter to me. This just shows me a bearish trend. And this doesn't matter to me because I'm a scalper intraday trader, but this is a monthly trend. Not really too relevant, right? But that is relevant to the weekly. The monthly is relevant to the weekly because if we're looking at structural levels, the monthly, weekly, right? And if you guys want to like have a basis, like let's say you have a major intraday, let's say you're a major intraday trader, refer to this time frame, and this time frame. Current, external, internal. And so then if you care about the bias for the swing, then you have to look at the one above and below. And then if you want this to then be relevant information, then you need the bias from here and here. Anyways, so the monthly relevant to the weekly, and in the weekly, clearly see a sweep. Don't have to be smart to see that, a sweep. And then based on that sweep, if you go to the daily, which would be here, if you guys can see the box, you go to the daily, we're at a sell to buy. Well, for one, we're internal trend being bearish. We have a CBOS. CBOS leads to LGC. LGC, we then come back into point of interest. So therefore, my daily bias, meaning the swing bias, is technically bearish. And so then, obviously, we would want to go to the H1. So then based on the H1, we see the exact same thing that we see in the weekly. Isn't that crazy? That's crazy. Right. And then from there, that's pretty much what dictated my bias. But fuck me, I just wasn't able to capitalize on it. And that's okay. Because we did not get that pullback after this. Right. At least we did here. But then I would have needed to understand this as SD. But this is kind of like a top-down view of like why the bias would be bearish. So is this technically bearish because this is bearish? Sorry. Is this technically bearish because this is bearish or because this is bearish? No. This is bearish because it aligns with this being bearish, which aligns with this being bearish, which aligns with this being bearish. So that's the trickling effect that I wanted to just iterate right now. Right? Does that make sense? Any questions, concerns with that? Do you guys see how I got to the bias? That's crazy though. 150 pips is crazy. So therefore, to see this stuff align like this, it's very rare. Like this is something that, like, if you guys want to do something actionable based on what I'm telling you right now, I need you to understand that for all of these to align like that is very rare. If you can make them all align like that, because there's a difference between timeframes aligning and you trying to fit a bias into multiple timeframes. There's completely different things, right? And that's just like a detachment thing. But to see this happen again is gonna be very rare. But I just wanted to show you guys that because it was really interesting. I just should have locked in a little more and taken the trade. But do you have any questions, concerns on that? No questions, no concerns on that? Makes sense? Let's see. In regards to that DXY bias, let me show you. Um, excuse me. Let me go to my channel. All right. Case study 39.
Taxes.
I'd rather recommend you guys to just go watch. You see what I mean with the lag though? Hopefully that is fixed with this recording, but this is the bias for the week. Let me see where we get to the part where I maybe it's at the start. Hmm. Yeah, you see, so this is the zone we were looking at first during 9 days ago. So the reason why we're looking at this zone, that was the weekly inefficiency. What weekly inefficiency? Here. And then I forgot which video. I don't know if it was that video exactly. But I had Pretty much this was the first thing that I noted. I had noted this for a while. This right here, weekly inefficiency. And we were aiming to get that filled based on the internal bias. Here. What the fuck? Here. So we're looking for that. And then we ended up getting a little bit deeper, but we cover that. And I cover that here, and then I cover that in the next EU video. And so the reason why I was temporarily bearish. Bullish, sorry, temporarily bullish, was because we had swept this major low here. Major low here, swept. So internal price action here is bullish. So we have a pullback, and then that's where it got conflicting. It got conflicting because we then swept the previous high here. We swept this high, we swept this low, then we swept that high. So technically, we're within a range. And something that I want to know, I don't know if I showed you guys this. I think I showed it in a case study. I don't recall. Let me see if I could find that chart actually. Yeah, it's here. I've had this chart for a while. This is kind of like a long-term prediction that I've had, and it's kind of playing out now. I think it was H4. So we were here whenever I first noted this. I need to go find this chart actually. This is kind of just what I was looking at long term. Predicting, but it's playing out pretty neat. And based on this overall vision, that's what led me to this being internally bullish because we had the inefficiency. And then I think it was the EU video after that one, I moved my zone here because of the buy to sell being here. And then from there, I just hate that we didn't sweep here. I hate that we didn't sweep there. And then from the week open, we just kind of died, which is insane. I just like it's good to see that bias because now you guys can go back and see why I had that bias at the time, and then when it switched and why. But I just didn't think it would be this fucking fast. Like this is rolling. Like this is rolling. Like we're going for previous lows now, I think. And why do I say that? Because we swept this high. Well, we swept this low, therefore we're internally bullish. And then the internal bullish structure completed the order flow. We completed the order flow, and this was a dual sweep. Broke structure internally, and we then broke. We had CBOS, and we reacted from the zone, and we've not broken here. So because we've broken here, this is unwillingness based on low, high, retracement, solidification, unwillingness, internal unwillingness, external unwillingness. So we could be seeing the view, right? Does this make sense? All right, making sense here. But yeah, neat little pick, right? That looks cool, right? I need to go find that chart. I need to go find that chart. I know I sent it to in a group chat. Because do you guys recall when I was talking about Bitcoin too? I forgot which webinar that was. It might have been a while. Or it might have just been a private video, but a private study video. But I've been bearish on Bitcoin since like I don't know, it's been a while. But does anybody recall that? Yeah, December webinar. Okay, cool, perfect. Working out perfectly again. Crazy, insane, crazy, right? Weekly inefficiency too. I waited a while for this. And also like one of the biggest, like I hate to put it like this too. One of the biggest reasons why I was also bearish is because my friend had told me that he had put a substantial amount of money in Bitcoin and he knows nothing about trading. And I'm like, yeah, it's kind of reps. But just on this view alone, Can somebody tell me why I'm leaning towards the bearish side? At least for the short term. Short term. Anybody tell me?
May I speak?
Mm-hmm.
Oh, I would just say in regards to like market structure, it's failing to go higher, right?
Where?
Um, and it looks like it's bearish if you look because it broke below and it's pulling back to go lower, right?
Where? You can't annotate, right?
So let me see. Oh, uh, so we swept here,
Mm-hmm.
right? Then we broke down, causing the solidifying high.
Mm-hmm.
It looks like, oh, sorry, I was trying to zoom in. We broke here, solidifying this low. So now we have a
Mm-hmm.
SR.
Yeah, but that SR would be relevant here because of the amount of data. So that's what we're looking for. Sweep to
Mm.
be lower. But back to this one. Low, high, CBOS. Low, high. But this is where, because technically from a weekly POV, we're still technically bullish because this, right, is not technically solidified on this time frame until this breaks. So technically the weekly is still bullish. So there is a possibility of this being bullish if, let's say, we then have an internal failed move to the downside. But from the daily, completely different picture because low, high, I'm sorry, low. I want to consider this a high just because we broke here. So then therefore we have a low into a high and then we broke again. So we have leg, leg, leg. And if you break it down even further, we could say we have internal structure here. Then this, we have internal bearish structure here, which means that that's internally bearish. Then we switch back to bullish, right? And then it switches back to bearish. So then we're technically bearish once we break here. So then we're obviously continuing internal structure. Break low, then we break a high that led into a low. So we now have internal range, CBOS, right? Therefore solidified the high. This leads into high, right? Then this leads into high, breaks, solidifying the low, CBOS. CBOS leads to the creation of breaking this high, and then breaking this high, we break that low. Therefore, internally, we are bearish. And then that's why that's leading to high into low. And then we have internal structure here, which is being swept, has confirmed LGC. So now I'm expecting this to go lower unless like since we're looking at the sweep now, unless we get like a push up and then let's just say this is a solidified low here. Then we break the solidified low, which would be here. But technically to solidify a high here, we would need to break this low or this low. And once that's high solidified and then it breaks, then I would invalidate my bearish bias short term. But right now, I'm still technically looking for like continuation to the downside. But yeah, it's cool seeing this stuff play out, just so you guys can see it kind of play out in real time too. But that kind of concludes my little rant today. Sorry it took so long. So let's see. Do we have any case studies today? What do you guys, any questions, concerns? I feel like you guys don't ask enough questions. You do, yeah. Well, yeah, but not everybody. By the way, guys, you want to know something crazy that I kind of like internalized today? There are people like within the private and the premium groups. There are people who are like old. I'm sorry, not old. I'm sorry, older, like 40s to 50s. I've even had like a doctor before, which is really cool. And then there's also, bro, we have a fucking kid in high school trading in his lunch break. That's fucking crazy. Like, I just wanted to mention that. I thought that was fucking crazy. Like, I wish I was doing what you were doing at your age. Oh, is that Nathan? Is that the one that he said he used in lunch break? Oh, no. This is this one. This kid's in high school, bro. That's crazy. But yeah, cool. We do have some case studies. But yeah, I just wanted to point that out. I thought that was really cool. Yeah, HS is kind of crazy. But I'm just like, those are the people that if they stick around, like I want to see that. I want to see how they turn out. By the time he's my age, like he's gonna be a killer. Okay, bullish. Technically SD, so that's why you require the reversal BOS, which is here. Reversal BOS. Reversal BOS. High momentum internally, meaning internally bearish. So then you would need that second transition. This is very good. So here, I just need you to be aware of all the reactions that are occurring. If you notice this into this, that's what validates this being a reversal BOS after the structural disruption, because this is bullish. You see the trickling effect kind of? Uh-huh. So you're catching pretty much a failed structural disruption after a pullback was solidified of an internal bearish trend, which would then cause this internal reaction to align with this internal break of structure, which would be a CBOS based on this trend. But if we're looking into the smaller time frames here, this is technically internally bullish, but that becomes aligned here, right? That's like the trickling effect. I don't know if I can make a framework on how to um, distinguish, but yeah, pretty cool. But yeah, cool. After, yeah, very nice. See, that's why whenever you see one of your entries go immediately to TP, that means that you timed the market correctly, like almost perfectly per se. So now with these types of scenarios, you want to see reverse engineer why this went right. What are all of the factors that are going in or that occurred? Like, for example, internal reaction. Then there's internal bearish high momentum, which means that this reaction was necessary. Then, like I said, there is structural disruption, but that would mean that you're technically bearish. But it's technically LGC if we're looking at the overall picture, because they're two sides of the same coin, SD and LGC. So if you can start to know all of these internal reactions, create combinations, and then do that over amount of time frames, then if you're to then figure out how to then get the perfect execution for that, then you have a model. Pretty cool. And that would even be like a variation to mine. We could even like probably just open them up here. You see, this is good because you also want to analyze what each reaction means. So like you're technically bullish. This, right? So this, whenever you see like a big reaction, even if it's news, doesn't matter, but more than likely it's going to be news. Try to look externally, see what that would mean externally. Like refer to the video, the one that I showed you is case study 39, the one that I made public. It was this type of reaction on GU that led me to then become bearish, because that manipulation, I would consider as a manipulation, is potentially for a reason. So if you have manipulation, transition, and then internal transition, then you're playing away from that, which is what you want to do, is play away from the manipulation, because the manipulation is there for a reason. But yeah, this is nice. I do like this. So I think you swept that high. That's good. But then this is like the biggest detail for your entry. However, for your bias, this could be one of the biggest reasons. Right? Makes sense? CBOS, internal range, sell to buy, reaction, continuation, LGC again. What pair is this? Oh, this is moving nice. 1, 2, internal range. I just don't know why you entered here. Because this is a good trade, but the only thing you need to know is that you have unwillingness here. Therefore, the reason why this won is because this range stayed intact. But there is scenarios where this could sweep and still maintain the range. And that's like a risk that you're taking by taking a long after unwillingness. So it's a winner, but it's not classified as a better winner than your first trade. Okay, this is important because this high led to that break structure. So you can argue this. So this would be um this here, structural disruption, right? And then that's why you're able to see then like internal LGC, and then you saw the internal move and that met its target, but then after the target it reversed, right? So in terms of the reversal bias, that's confirmed here. But then the actionable move based on that structural disruption would be this LGC here. And then obviously entry, SL, and then you're targeting this as your external high, but then your internal target is here. So then seeing equal highs, this, and then maybe a trailed stop, then that would probably be like a trailed stop plus potential partial. But in terms of your execution, this is internal SD. You could consider it, yes, I would consider that valid. The only issue is I don't like this POI. I think this POI seems a bit forced. Or is that not a POI and you're just using the Fibonacci? If it's just a Fibonacci, that's fine. I see what you're saying with the model that we were talking about last week. But if it's just by the Fibonacci, fair play. Fair play. And then it's now a question of how you manage your trade. This guy. He's trading on like 15 seconds, if you guys probably haven't assumed that. Okay. So daily.
All right. You sell up?
You pick yourself a sandwich.
Yo, 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 yo. Um, okay, so you changed your colors, which is good. That break. I think we talked about this last week. Next. Okay. Better. So over here. This is important. This is a structural disruption because you have a bullish move. You have solidification of a low. So then the breaking of that low is structural disruption, making you bearish. So you bought here. Am I seeing this right?
I was looking for sales.
Okay, let me see. Oh, is this not a... Oh, okay, now next thing, change your colors on the P&L thing. I can barely see that. Okay, this ended up failing, okay. Trying to see, failed to sell, OFD. Okay, this ended up failing. Is there the internal side to this? Okay, better. So there is structural disruption, ended up failing. So then the failing is now a new protocol, which to me would probably be, I would not look at that unless we sweep. So the only way for me to be bearish again, I would need probably this low to be taken right now, unless we then have, let's say, CBOS break, then I would be bearish again. But because the SD failed, I would not be bearish yet. At least not based on what I'm seeing right now. Yeah. Because here, this is where multi-time frame analysis becomes hard. Scalp, the micro, sorry, internally bullish. Right? The full external, technically bullish. We do have this, which would make this a bearish trend, at least here. And the issue with wanting to buy here then would then be that there was no structural disruption internally. So I cannot be bearish. I mean, I cannot be bullish because of this, but I cannot be bearish because of this potentially. So then when I'm looking at the entry, this is technically bullish. I guess you could say this is a failed move there, but that would just mean that this is internally bullish. So then this is just CBOS. Like the issue with wanting to note this as something as a bearish reversal is that because this is internally bullish, you could just see by going up. These breaks, I would still expect this high to be broken. And then if then I see that be broken, then I could confirm a sweep.
I notice you say like, oh, this sweep has to happen, but like I in my case, like I have no idea. Like whenever you say it just happens. I'm like, how do you?
What do you mean
I
it
don't know. How
happens?
do you
Which
think
part?
that?
Which part? Which part?
Um,
Like when I said the SD failed?
yeah, like I mean, like
Like this?
yeah, whenever like it does the little sweep and then it does the little model,
Like,
it does
oh,
that.
my model, like the sweep model. So like this is a concept I introduced with the sweep model. It's like, yes, we're leaving an unsubstantial new high, and yes, we're having internal breaks, but inherently, for a sweep to occur, there has to be some type of opposing level of structure going against you because that's what's causing the sweep to begin with. So because of that case, that's why my dual sweep is like my favorite one, is when you have the reaction here, right? And then you have a pullback low, which is then solidified here, because this, I'm still expecting the level of structure that's opposing me to complete internally the ABCD. Does that make sense? Because if we have a sweep, right? Like, let's go to UCAD. So this is like a crazy sweep, actually. Crazy. So there's a sweep here, right? There's a sweep here. So, but in order for a sweep to occur, there has to be some type of bullish structure, a bullish break of structure, sorry. Therefore, that's why I call the sweep the failed break of structure, because it's a failed break of structure that then has a transition to then go lower, or then go in the opposing direction. So in order for this sweep to happen, this has to be bullish. This has to be going against the direction of the sweep if we are looking to continue the direction of the sweep, right? So if you go zoom in now,
Can I
this hold on,
can
hold on,
I
hold on,
okay.
hold on. So this has to be bullish in order for the sweep to be, in order for the previous side to be swept. Therefore, this is not technically LGC yet, because there's still bullish structure here. So therefore, this is CBOS. To potentially anticipate this, you have to anticipate this to always continue the internal structure, unless you have structural disruption. So therefore, the actionable play on this sweep is structural disruption. But then that structural disruption aligns with the sweep, and now you could potentially start to argue a type of LGC because it's an LG favoring the external direction, but it's a different type of LGC. It's an LGC based on a sweep, which would be what I used to call, or I call the traditional sweep, because there's implied sweeps, traditional sweeps, but that's all like book 2 content. So there is no way I could have. So there is, here's what you're doing. You're going to like M1 here. Be like, oh, okay. Break of structure, reversal BOS, sell. Sure, that's fair. But if you're doing that, then you're going against the level above it, which is scalp, because the scalp needed to be bullish to sweep that bearish range. Does that make sense now?
Uh, when it so you were just talking about that sweep, right? I was like, wouldn't that solidify the range, like the whole, like the low, like solidifying low, like the whole S,
Which one?
like the whole, like that sweep right there? Wouldn't
Which
that
one?
solidify
This
the
one?
whole leg,
It would technically solidify. Let's see. Let's see.
right? Because
Yeah, let's see. But let's confirm. Let's see. So this, you could say that, yeah, you could. You could say that the beginning of this break of structure, this is the first time we've broken structure in this entire leg. So you could say that it solidifies the range here. But that does not mean I cannot be that means I can't be bearish yet. That's why I have to wait for
right.
this, because we're trading in a discount for one, and two, this would imply me to be bearish, which would mean this is the actionable reaction to make based on that sweep. So yeah, technically,
So would that be considered what, bullish? That little sweep right there, that little leg,
which one?
that leg, that green to the orange.
This one
Th
to this one?
yeah. Would that be, no, sorry, that green to the orange to
The
your left.
orange to
Yeah.
the orange to the green is technically bullish internally
Okay.
from,
Yeah.
and
I was
it
just
has to
wondering.
be bullish. If not, you cannot have in like, you need bullish structure internally to have an external CBOS. So for a CBOS to happen, you need the internal to be opposing.
Yeah, because
If
that
not, it
whenever
cannot happen.
that happens, and like I'm like, I was having a question right there. Was that an external, like, CBOS, or was this the like a I think I said a CBOS or a
Well,
sweep
it
or
is a
something.
CBOS based on this range here, but
Yeah.
that CBOS requires internal bullish structure.
Yeah, yeah, I get that. Yeah.
Mhm. So then that way, if you want to time, because I'm on this time frame, I'm on the scalp time frame. So that means that this internal is bullish, which is opposing the intraday swing biases. So I have to wait for this to convert, which didn't convert until like here, when the CBOS is here, confirms the low.
Oh, okay.
So
How
like,
come you
so
didn't
then
how come you didn't use the whole range? You see how you only use that little leg? How come you use
Oh, so
the
these,
high?
the proper legs here to use are these.
Y-
So look, high goes into low. So we have a CBOS, right? Meaning the internal leg is bearish. So I'm looking at high that goes into low, pullback goes into low. So now we have a break. That means that this is now solidified based on low, high retracement.
Yeah.
So therefore,
No.
for this to break now is now structural disruption based on this leg, but it confirms this sweep. So it's bias, it's bullish failing for bearish. Does that make sense?
Yeah, it's bullish, but
Mm-hmm.
it failed to
And
react,
notice that
right?
this didn't break here. So because that didn't break here, you can't consider this yet. Like that was my bad. I shouldn't have noted that. Because this high led into this low. So we still have the pullback into the low. And like this is where people start to over refine. And there's like, oh, but what if there's like a structural disruption internally? Well, now you're dealing with a bunch of levels because now you're dealing with this, 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 and then this. So I'm choosing to disregard this little shit because high, low, solidification, structural disruption. Now we can start looking for stuff. And then that's why you can even use from, because if this now aligns with like major intradays and swing, you can just use the entire zone. And that's when you can start to align, let's say M15, M30, stuff like that. Because this little range here is then aligned with like the H1, which is aligned with the daily, right? So that's what I'm saying. When this stuff aligns, like this is when you really get big opportunity. But you see that the risk reward isn't as high as you would think because usually when you're aligning like 4 levels of structure, you're getting like a 1 to 7, 1 to 8. And that is just kind of like by default. That's kind of just like the average based on the rule sets that I'm based on what I'm seeing. But like if I wanted to go deeper, then and then go to like M1, that's where it gets really complicated because you'll see M1 shifts everywhere. Shift, shift, shift. Here, shift. You see them everywhere. Shift. But now this is necessary for the scalp to have its pullbacks or its big moves. So like aligning them, the more that you go, it becomes a lot harder to not just align them, but you also start to like trump yourself in terms of like overvaluing the internals over the externals. And then it just gets way more complex. Like dealing with 1, 2, 3, 4 levels, and then dealing with 1, 2, 3, 4, 5, 6. Having to deal with these compared to this. Like now it's a question of which of these timeframes have to be aligned for you to have conviction in the trade. And it's a lot harder to do that with more timeframes.
It takes me a little longer than I should whenever it comes to analyzing. I
What does that
personally
mean?
like I zoom out like from higher time frame and then I look. But
What does that
man,
mean?
I just overanalyze it. Like I
You try to
look
go too
at
deep.
I think yeah. And then I
Then
just
just
confuse
restrict yourself.
myself. Huh?
Like restrict yourself to certain timeframes. Like just unstar the ones that you don't want.
No, so I use the daily, the H4, the 15, and then like the smaller time frames to look for a trade. But I just confuse myself
Yeah, but that's already
whenever
too many then. That's why like even here, like I have like only like a certain amount of timeframes.
like so I sometimes can't tell them apart like, oh, is this an external CBOS or is this a reversal? Like
Exactly. So you just gotta stick to less timeframes. Stick to like 4.
okay. So
And if you want, you could just add another pair because then like I'm sure you want to over refine because you want to get a trade.
yeah, I'm trying to be right and then I mean I end up
That's
sometimes
bad.
being right,
You don't want to
but
be
then I
right. You just
just
want to iterate. Just want to do, and then whatever happens, happens.
okay. Yeah. But when it comes to like breaks, there's different types of breaks, right? But like, it's hard to
So
tell
like
like the
based
sweep.
on
Like for
this,
example, that's what I struggle with
this is a
sometimes.
reversal BOS based on this range, but it's a CBOS based on this range. But like that's the problem with like the markets is because they're fractal. So because they're made up of each other, you need one for the other. Like you need this for this, you need this for this. That's what makes it difficult because for one, it's ranges within ranges within ranges within ranges. But then two, it's just like because of that, that means that in order for something to go up, it needs to go down as well. But then in order for it to go down, it needs to go up internally as well. That's the problem with the markets. But the solution is like less is more. Like, yeah, see, like he uses M1, M3, M15, and H1. Yeah, that means that you don't look for H4 targets. That means that you don't look for daily targets, but you can potentially note them because if you get like a daily sweep, then the internals could start to reverse on you. So just
Raiza,
something
¿por qué
to
no haces
note.
eso cuando vengas, Raiza? A mí no me importa.
All right. Anyways, any more questions, concerns, guys? Because we have been on here for like a while. It's my fault, totally, but any final questions, concerns, guys? I had meetings to start. Yeah, we did the giveaway earlier. The hello. But yeah, um if people don't answer for like the books, I mean for the monitors and stuff, like I will probably um I'll just move on to the next person. Did I do case studies? Yeah, I already did case studies. Cool. Any last questions? Concerns, guys? And also people with the recording, let me know if this recording's better. Like, because like I think I showed you guys here, like sometimes this is kind of laggy. I don't like that. I don't like that at all. Maybe now that I fixed like my Zoom settings, it works a little better. Um, but yeah. Other than that, I think that'll conclude today. Appreciate you guys hopping on. Um, stay tuned later. I'm gonna see if I can make like an article for Twitter. I want to start using X like slash Twitter more. Um, I find it to be a really cool platform now, especially I don't think it's as toxic as it used to be with the trading space. But yeah, other than that, I will see you guys on the next one.